Well, we might have already seen one of the breakouts. It just went the wrong way. Bitcoin's always been a tough asset to really predict prices. I know everyone always wants to hear people's price predictions. If you say Bitcoin's going to 100,000 or a million, you get a lot of airtime. But as I've said on your show before many times, Bitcoin is really just a call option on future problems with confidence in your local governments and confidence in your banks. So during periods like March of 2020, when that happened in a big way here in the US, when you lost all confidence in regional banks, that was a real boon to Bitcoin's price, right? Last year, when you saw in Canada, sanctions being put on truckers, the loss of confidence in government, that was a big boon for Bitcoin's price. When you don't have that, though, it's very hard to figure out, well, what should Bitcoin trade at? Should it be 20,000? Should it be 30,000? Should it be 50,000 or 10,000? And that's why for the most part of the last 18 months, Bitcoin, more so than any other digital asset, has really just tracked real rates. When real rates are going down, Bitcoin generally does well, just like, most tech assets, just like, pretty much any other risky asset that has no cash flows. And as real rates start to go higher, which is what we've seen over the last 2 months, Bitcoin starts to struggle. So, if you're looking for a short-term move in Bitcoin, it's probably going to be, if we start to see, rates start to go back down and or, inflation going back up and therefore real rates going down. Or you're going to need some other big movement at a more government or bank level that reduces the market's confidence.